Alright guys, we're already deep in the twilight zone, but things keep coming up. They are so wild, they are so crazy. It's incredible to even believe they're happening. So Trump has confirmed a whole new flurry of punishments for the global economy, especially America's biggest trading partners. He has officially confirmed that the big tariffs are coming for Canada, Mexico, while upping China's tariff to an additional 10%. So we're now at 20%. Now this is crazy because he originally backed off his neighbors, but it seems they didn't make the cut. Now didn't Mexico and Canada concede to the border issue somewhat? Well, apparently it isn't enough, and let's take a look at Trump's promise of paying up north and down south. In March and April, Trump will unleash a ton of tariffs that will hammer down on Mexico and especially Canada. A 25% across the board tariff for everything, including steel, aluminum, cars, and chips. Reciprocal tariffs are coming that might rope in value added tax as well. There's simply no escape for Mexico and Canada at this point. It's very likely that Trump could push them into a painful recession. 78% of Canadian exports goes to the US. For Mexico, it's even worse. 80% goes to US consumers. And in GDP terms, it's even crazier. Nearly 18% of Canada's entire GDP revolves around exports to the US. For Mexico, it's nearly one third. If Trump goes ahead with his tariffs, both of these economies will be in the red from a recession. And here's how bad Canadians see their economy in the next 6 months. We are pushing back towards the pandemic levels of 2020. Over 65% of people believe the economy will be worse in the next 6 months. And if you're in Canada, you can feel the anger and the chill in the air. There are boycotts going on, and people, well, they're generally very frustrated with the US. But Trump still believes exporters pay the tariffs, so there's no going back from this one. There's only one way out now, and that's to take the Trump deal of being the 51st state. Now, I know it's crazy, it's insulting, but that's the only deal on the table, at least to him.
And I say Canada should be our 51st state. There's no tariffs, no nothing. And I say that we give them military protection. They have a very small military. They spend very little money on military. On NATO, they're just about last in terms of payment because it's not fair. It's not fair that they're not paying their way. And if they had to pay their way, they couldn't exist. The fact is that if we don't give them cars, we don't have to give them cars. The tariffs will make it impossible for them to sell cars into the United States. The tariffs will make it impossible for them to sell lumber or anything else into the United States.
Now, there's a big speculation that Trump is using tariffs as bargaining chips to grab incentives from countries. Now, does he really want to wallop Canada with a 25% tariff and spike inflation in the US? Or does he want something else? Now, a few days ago, Trump demanded for Canada to build a Keystone XL oil pipeline. He basically wants cheap Canadian crude oil transported all the way to Nebraska. Now, this is a very important pipeline for Trump. We already know that the US buys oil from Canada at a $15 discount versus the benchmark. That's around 20% cheaper. That's cheap oil powering US industries. So why not get more from Trudeau? And here's how valuable the Keystone XL pipeline is for the US economy. The existing Keystone line can send 500,000 barrels from Alberta to the United States. But with the XL pipeline, Trump can get an additional 830,000 barrels a day. That's cheap crude straight from Western Canada to the refineries in the Gulf Coast. Energy is a critical input in manufacturing. Everyone knows that, especially when Trump wants to reshore all these big, heavy industries. Now, this includes semiconductors and auto factories. He wants cheap oil from Canada to do the heavy lifting here. US refineries are best suited to process heavy Canadian crude, which makes up 75% of US supply. Trying to get alternatives in now won't be easy. So this is one card Trump could play to stop the trade tariffs. Now, it won't be easy because Canada, well, they've started to wake up. If you continue to link Canadian oil to US infrastructure, you'll continue to get massive dependency and oil revenues won't even go up. There's now widespread support across the country, over 80% for Canada to build new oil pipelines from the sea to the sea. And it makes total sense here. An eastern pipeline allows you to sell to Europe who desperately needs energy. You can get a much higher selling price that way. You build pipelines to the west and you can sell to Asian countries. China and Japan, they'll be very happy customers. So there's a good chance Trump's ploy is to get more of Canada's resources to fight an industrial war with China. It's the same ploy he did with Mexico a few days back, telling the president to tariff Chinese imports or face punishments. Now, we've said this many times that US manufacturing isn't competitive anymore, and the data is flashing red as we speak. US factories are facing the highest input costs in 24 months. The cost of materials like lumber and steel are moving up, and they are continuing to head higher. This is no way to fight an industrial war with China. And considering Trump's steel tariffs are coming into effect soon, input costs are going to soar even higher. If we look at US actions around the world, it's pretty obvious what Trump is really after. He's cozying up with Russia to get access to rare earths, and he probably wants something from Canada to push down inflation and manufacturing costs. The US economy is finally facing a problem we have called out for quite some time. You cannot initiate a tariff war and not face higher inflation, especially when your supply chains are broken. And that's why Trump is heading all over the world with Scott Bessent to sign natural resource deals. Now, just listen to Bessent. He's trying to get Ukraine to sign over their critical minerals.
I'm sure President Zelensky and President Trump will have a wide-ranging discussion, but as far as the deal, it is complete, it is on paper, and the Ukrainian government has approved it. It is just awaiting the signature of the two heads of state tomorrow, and it is a deal on strategic minerals, oil and gas, and infrastructure assets. And it's really a win-win because it brings the Ukrainian people and the American business community closer together. So I think it's very exciting. President Trump is going to be the first president ever to create assets for the American people rather than debt.
Now, as we all know, the deal crashed and burned yesterday. What a clown show in the White House that was. But that's the game plan. That's the true agenda. The US is firing on all cylinders to build back their industries. Now, the other side of the coin is just as vital, and that's securing a vital supply chain of minerals and energy for the United States as well. And once we understand this and look through this lens, everything gets rather simplified. But here's the funny part. There's nothing really rare about minerals or rare earths. The real value comes from refining the minerals into something useful. And that's where China has excelled. Looking at the various clean energy metals, China's real dominance comes in the refining and processing segment of the supply chain. Now, Beijing mines almost zero nickel and only 8% of copper, but they have over 35% of global refining. The same goes for cobalt, lithium, and rare earths. The majority aren't produced in China. But if you need to process these minerals, you need a Chinese factory. Getting the resources is but the first step. There are multiple rungs on the ladder you need to climb in order to turn it into a usable input for industries. Now, when Trump announced his additional tariffs on China, it came as quite a shock to the Chinese leadership. There was no warning at all on the extra 10% import tax. It just came out of the blue. But will the Chinese economy collapse? Well, not really, because they have taken the time to diversify their trading partners. Their domestic consumption has also been increasing despite the property collapse. In 2023, only 37% of China's economy is dependent on trade. Mexico and Canada are easily double that. So an additional US tariff on China won't be that severe. China's domestic consumption can easily soak that up, especially if Beijing launches a big stimulus wave. China only sells 15% of their total exports to the US consumer market. The other 85% ends up with the rest of the world. By not counter-tariffing the US, China actually has an advantage over Trump. Trump's punishing his biggest trading partners that supply the US with nearly half of their total imports, and that pushes prices up and causes higher inflation. It's a big reason why you don't see China imposing big counter tariffs because there's simply no point. For Beijing, it's much better to cut critical inputs into the US, for example. Now, in response to Trump's tariffs, Beijing has given the ultimatum. If it happens, China would retaliate using all necessary means, which ultimately means a full-blown trade war. Everything could be weaponized to inflict pain on the US economy. It's important to remember the US is facing both a failing stock market and higher inflation today, and there are generally two routes China can take to fight back against the US tariffs. The first is to devalue their currency. A lot of people, they are betting on that. During the first trade war, China weakened the RMB by 11.5% versus the dollar, and it helped to offset around two-thirds of the tariff hike. It's direct and it is effective. However, today it's risky and not really needed. Devaluing the currency makes bilateral currency trade harder because the RMB would be losing value. Holders of the currency would be very unhappy. Now, this move will also tank China's stock market as well. Meanwhile, the US could still buy Chinese goods with the tariff at a cheaper price. So you aren't actually punishing the US, you're actually punishing your own economy. The US also doesn't export much goods to the world as of now, so a devaluation by China isn't exactly the best route to take. Over the next week, China is having their two sessions meeting, which is extremely crucial, and many people are betting that Beijing will launch a big stimulus to boost domestic demand. Now, this is one area where China actually has the advantage over the United States. Their cost of borrowing is extremely low versus the US debt market. The 10-year Chinese yields are hovering at 1.6% today. US bonds, however, are trading at 4.3% yield. That's more than double the borrowing cost. So China does have the fiscal room to borrow money to boost domestic spending. They've already injected over $50 billion into their big banks to stimulate lending, but they have to do much more to counter Trump's tariff war. So the US and China, they are playing two different games. America has too much consumption and not enough production, and whatever they produce is also extremely expensive. And that's why Trump is trying to cut deals to access raw materials. Now, China, on the other hand, has not enough domestic demand yet, so they need to get people spending again. So, imposing counter tariffs or devaluing the yuan isn't exactly the best idea. They need to launch a bigger stimulus wave. But let me know what you think. Will Trump get his cheap oil from Canada? And how will China respond to the additional US tariffs? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.